All right, good morning, everybody. Let's give it a minute for people to join the stream, and I'm going to get the links out on Twitter. So just a moment here. I'm going to check, make sure we got audio. We're good. We're good. We're good. So it's out, and we got a lot to talk about. So, just a moment here while I get this out, and we will get on to our day. We've got a lot to talk about. It's pretty cool. So, all right. Let's see. Where's the space at that I just created? Join space, reconnect to the space. There we go. Okay, good to go. And we're just going to pin this up here. All right, fantastic. I think we're all good to go. We're live on Twitter, live on YouTube. And why don't we see if we can't get it going on Telegram as well, just so it's there. All right. We'll do this right here. Share that. Okay, I think we're good. Let me make sure that this is working. Okay. So, all right, I think we're good to go. We got YouTube, we got Twitter, we got Telegram, and we got a lot to talk about. So, let's get into this. Let me share my screen. So, share screen, you can see my window. Don't want to do entire screen, but we'll do that. Okay. Should be seeing my screen here. And good morning. First off, good morning to everybody. Hope that you're having a great day. We're going to sit and start our day looking at the crypto charts. We're going to have some coffee, and together it's a good time, right? So take a sip of your coffee, smell that brew, whatever it is that you drink if it's not coffee. But yeah, it's good. All right. Okay, good way to start a day. Definitely blessed. So appreciate that. Got to count your blessings. So zooming in, this is 3 hour. Let's change to 1 hour. First off, when we start our day, we need to understand where we're at. What is the environment, right? Here's a hint. So this was the beginning of April, and we are on May 10th. So down. That's where we've been. So it's not been very good, but we're here, and now we can look for some opportunities. So a few things I want to zoom in and see, because we had a pretty big um, bounce yesterday. When I say big, I mean we're talking like 10% ish, which is pretty good. Um, I want to show our levels, what we bought into. So we turn these on. Okay, let me just hide some of these here. Okay, so let's hide that. Let's hide this. These are the 4 buys that we took. Let me turn my phone down. All right, so these are the 4 buys that we took. Okay, 2301, 2273, 2256, and 2206 and 50 cents. That was a good one. I was not sure if I wanted to put that one on there, this 4th one, but we put it on and it worked out, and we caught the bottom. Let's see, what was the bottom? So 2197, and yeah, so basically within like $9, $10, right in that range. So we caught that pretty accurately. And what does that give us? That gives us an average entry. I'll hide these. An average entry of 22.56 and 60 cents. So we are in profit currently. Here's this. I'm going to show you this right here. Okay. This is our position, right? So this is our stop loss down here, 1948. You can see that. And our take profit is 32.55. So it's a 44% move if we are able to hit this. Now, I want to talk about swing trading and a strategy with parallel channels. And where this is perfect because this is where we're at, right? So that's what we're going to get into today. So we'll talk about our take profits and how aggressive we're going to be, and things like that. But this is what I want. So let's go ahead and mute that. We're going to leave that off for now too. First off, let's continue with the judgment. Why did we take those trades? Why are we here, right? Why did we buy in these 4 buys? Well, because now the new idea is this one right here, that we're in this range, right? It's kind of a messy range, to be honest. You could draw it down here. You could I have it drawn up here, right? Or you could go to the top up here. But I think that this is a good range. The reason why, because we have this here. We came up, we got resistance from that same line, gave us support, we dropped below it. So yeah, by the way, this is a good example for when people say, well, you want to wait for it to, here, let me change my cursor so it's a little cleaner. You want to wait for it to break the line and come up and then back test, and that's your entry for a long. Well, if you did that, you didn't do so hot, right? Hold on a second. You lost 40%. It's not a very good good trading strategy in my view. This is not where you go for a long. This is where you look for confirmation for a long you're already in, hopefully, right? This is where you would go for a short, if a trade at all, right? And when you're at the bottom of a range, this is what we'll get into. This is where you look for longs, and it's paid off before, right? So this is the new idea. This is the new idea, is that we're in this range because Bitcoin and Ethereum, they love to range. And just imagine kind of like ping pong. So if you're not watching it live on YouTube or Telegram, you're just on Twitter here. Imagine like ping pong. You have bottom, you have top, and we just bounce between the 2 levels. We go from one level to the next, up, down, up, right? And it's just this wave pattern. So this is where I think we're at. Now, we're actually moving down pretty good at the time for right now. Let's do a couple things. And matter of fact, I actually had this mapped out. Let me show you what I was looking at. So let's go to like the 5-minute chart. Here's what I was thinking. So we got our Elliott wave count up, right? 0, 1, 2, 3, 4, 5. And now we need our wave count down. How close was I? Pretty close. Pretty close, right? This is 0, A, B, and C, maybe, right? We'll see. We will see. But that's pretty close, right? So This move down, was that completely, unanticipated? I don't think so. I had this on my chart. I get to toggle it on and off. That's pretty close. But with Elliott waves, it works on different times, and so the idea is basically you have a zero. Oops, sorry. You have a zero, and then you move up for your first wave. You have your retracement, move up for the next one, have a retracement, move up to the next one. And you can notice these two, this is not the lesson today, but it'll be good to know. So this is about 6%. Okay, let's measure this and see this is roughly the same. Okay, so it's the same kind of extension or more from the first wave and the third wave. There's a good amount of movement, at least the same distance, right? But that's not true of the third and fifth, right? So the fifth one is much more shallow. So it's oftentimes we get a move like this. It's like 0, we go 1, we come back for a 2, we go up about the same or more, right? Very rarely is it shallow like this, okay? We come up, we come back down, right? And then this one, it's not very extended, right? It's not like a lightning bolt. It's like this, right? We see this often with Elliott waves. Typically that fifth wave takes the high, but not much more. And it kind of leads into like this head and shoulders pattern that you may have heard of before. Let me make sure I don't have too many. So then it comes back down and it comes back up, right? And then it comes back down. And so this would be, someone would see this, right? And they're like, oh, that's a head and shoulders. Yeah, it's also it's built upon like these Elliott waves. I don't particularly like to trade Elliott shoulders or Elliott shoulders. There you go. There's a new term for you. Head and shoulders. It's it's important to be aware of, but I don't necessarily think that's it's all that helpful. It's kind of basic, and so you can be counter traded often with that. But you might also see this and call it like a double top, right? Because it didn't really go too much higher, right? Just kind of in the same area. Whatever you want to call it, the principles are the same, right? So wave up, waves down. Here we are. So this is expected. When we got this fifth wave and it was right here, I thought, yeah, let's map out the other side of this, and pretty close. I mean, within few bucks, unless it just dumps right here. But yeah, pretty close, just eyeballing it, so not bad. Actually, I didn't even go off of any real levels. There's probably some levels right here that I would anticipate we would find some support. Regardless, that's neither here nor there. This is the environment we're in. Okay, I want to show another thing that we've got on the horizon. Did it show it? What? Hold up. Oh, I gotta zoom out a little bit because I'm looking at that. That was a 5-minute chart. So let's go to the 1-hour chart. This right here, this is what I'm toggling on and off. Okay, this is a trend base Fibonacci timeline, right? I want to show you a couple things. These are really, really cool, and they work pretty well. So it sounds weird. It sounds like almost, magic, kind of stupid, almost, to be like, oh yeah, I can predict the time of when something's gonna move, right? It seems really weird, but in reality, you can with pretty good accuracy. So let's do something here. Let's just take a time zone. You want to find like a big area, okay? Like a big high and a big low, right? So let's go to the all-time high and put our first little marker. Let me highlight it. Put our first little marker there, and we'll come down to the yearly low, right? So we haven't been lower than this since, okay? Look at this. Look at this line. So oftentimes, so what this is talking about is it's pretty good at calling bottoms and calling tops, but really what we're talking about is it's at this point that we start to get movement, right? And we did. I mean, from here was a 40% move upwards. So that's pretty cool, right? Just took the top, took the low, and boom, there we go. There's other stuff that plays out like that. I don't know. We could mess around and see if there's anything else that lines up. There you go. That's not too bad. You take this point right here, and you take this point right here, and what did it give you? It gave you the yearly low. So as far as calling bottoms, that's pretty good. That's a pretty good bottom. And had you bought that and sold it absolutely perfectly and caught both ends, which you're never going to do, right? Have proper expectations. It's a 52% move. It's pretty great. So that's what we're looking at. Sorry, hold on 1 second. Okay, apologize. Feeling really stuffy today. So what do we have coming up? That's what I want to point out. We are coming from the all-time, or sorry, not the all-time, but the yearly low and the yearly high, right? We are getting a time zone here. So it could be, I mean, this is a range and whatever, but we're looking at like the 15th, 14th, 15th of May, between the 19th. So in the next week or so. So what could we anticipate? A couple things. This is what I tell you. I'll show you what I hope we get. Okay. Let me get back into the 15-minute chart. All right. So what I hope we get is, I don't know, let's put some channels on here. Let's put our old channels, because this is going to play a role. All right. All right. This is what I hope we get. Where we, maybe we come down and we come back up and we're kind of messing around. Maybe we hit this, right? And then it's just down, right? It's just down, it's down, it's down. Maybe we take this low, right? Maybe we take it, or maybe it's just like a wicked quick move down, and then we trend up, and then that's the bottom. That's what I hope. Now, let me tell you what I don't hope for. And it's okay if it happens, but keep in mind, I've got my stop loss here, and the difficult thing right now is we've got some really good trades under 2,000. So it's a hard thing to trade right here, but because between 1,700 and 2,000 is a really good range to buy in as well. But the thing I don't want to do is I don't want to have my stop loss all the way down here, right? Because now my ratio is 1, which is garbage. And then also just like continue to like DCA down into these like lower prices. It's just not what I'm going to do. So what I'm going to do, because I only need to win 3 out of 10 trades to be profitable. Hopefully we do better than that, right? But I'm going to have my stop loss here. And if we go down, as soon as we break in 2,000, I'm putting in orders for other things, or like other positions and another trade, and I'm going to be expecting to be stopped out, and that's going to be, okay. But so what I'm hoping is that we kind of just range, maybe hit this, maybe come down, whatever, right? And then in here, maybe we take that low and then we move on up. That's what I'm hoping. What I don't necessarily want to see is us just continue to move, right? And then we hit this and it's like dump. Right? And then we put in our low and then we move. Not exactly, wanting that scenario, though it would be good. I mean, it would be an extra like 25%. on the trade. So it's all right. It's all good. Anyway, so this is what I'm looking at. I think we're going to be consolidating. I think we're going to be trying and fighting. And between the 15th and the 19th, we're going to get some movement out. This very well could be the low, or we could find a low in the next few days. So we'll see. We'll see. But so far, so good. I mean, we've got a pretty good entry on our long. And we want to monitor a few things. Like I said, we don't want to delete our, let me see, let me turn that up. We don't want to delete our channels, our old channels. So let me back out to the hour. Okay, you might remember these channels. This was our downward channel that we had, right? And this was our sloping channel upwards. We can expect resistance on these levels as we move up. So we don't want to delete those. We want to keep those there and reference those as potential points of resistance as we move up in the future. So, all right, here's the new idea, right? Do we take this low? That's real possible. That might be what we get between like the 15th and the 19th, is that we take this low and we get a swing failure pattern. I was thinking we got a swing failure pattern on this one. We certainly didn't. This low right here. I mean, we're above it right now, but yeah, it's not a swing failure pattern. We had a lot of shorts close, but we didn't have longs open, and we didn't really move out of the area. So yeah, that was not a swing failure pattern. We could potentially get that here. Yeah, but basically this is where we want to buy. So let's get into swing trading on a parallel channel. Okay. There's a strategy here, which is to say, you don't buy, you don't long the top. You don't long the top, meaning buy it, right? And you don't short the bottom. Okay. You want to do the opposite. As you approach the bottom, this is where you want to be buying. This is a good area to buy, right? Because if we move up, that's like a 40-50% trade. That's a fantastic trade. You know, it's huge. And on a swing trade, meaning like a longer position. So it's not going to happen in a day. Like you're going to hold this position for a week. You might hold this position for a month. If you shorted this right here, right? If you shorted this, you've been holding it for like a month. Did it pay off? It sure did. It absolutely paid off. That was a good trade. Now, what we want to do is we want to, yeah, look at this resistance. Anyways, what we want to do is we want to have our first take profit be the center line of our parallel channel. Meaning, so we buy in at the bottom, right? We always have our stop loss, always have our risk management. We never compromise on that, right? We're very, very disciplined. And then as the price moves up, when we hit that center line, we take our profit, right? I've got my profit set, $2,800, and I adjusted it so you can see this. I'm taking 13%. Why? Because that gets me a free trade, right? That's what I want. I want a free trade at halfway. Now, I know some people take 80%. Okay, let me show you with how I trade it. If I took 80%, that completely messes with my risk to reward, and I can't do it, right? I'm not allowed to do it. It puts me at 2 to 1. That doesn't work. That doesn't work. So I'm going to take 13%. I'm going to take my free trade at halfway, and then at what do I have set? It's 32.55. 32.55 right here, and we could go a little bit higher. I mean, let's see, what would we get if we went to like 3,400, like the top of the range, 3,400. I mean, it would be a decent trade, right? It'd be a decent trade for sure, no doubt about it. But I want to be, let's see, let's actually adjust this based off of this as well. So let's look at a retracement here. Go there, and we'll take it there. Yeah, I mean, so 32.55 is even above this like 60%. So I don't know. I'm gonna get my free trade and then we'll see how things play out. But there's a lot of single prints, top of the range. I think we're good at 32.55. But we'll see if we can get to 3,400 or higher. But if we can do that, let's say we cash out and we're still gonna hold something, right? Oh, we don't want that. Let's see. Oh, we can't even do that. We need to take 100%. 100% right there, and that would be pretty good. I mean, it's 4.91. That's our risk to reward. Oh wait, no. 32.55. That's it. 4.48. It's beautiful, beautiful. I'm good with that. I'm good with that. Why? Because at the end of the trade, I'll have more money than where I begun. So that's what it's about, right? You can't call the bottoms perfectly. You can't call the tops perfectly. I mean, we did a pretty good job. If this is the bottom, we did a pretty good job, right? Here's our buy-in. Quite literally 2.7% from the absolute low, if this is the low, right? So not a bad job, but this is why we have our levels. This is why we look at points of control. We try and understand the narrative, right? Find where investors are going to be, because there's investors here, no doubt about it. There's investors there. Okay, so let's get back and let's turn this off. And we're going to delete that. All right, so as the price moves up, you want to look and you want to use the trading partner to understand where your free trade is. I mean, look, you really could do 60%, maybe 50%. I don't know. Where do you want to be? Hold on. 50%? You could. Could you take 55? Yeah, you could. If you really wanted to, you wanted to secure it, you could do 50%. Not a bad idea, right? Not a bad idea. Let's see. I'm curious. I mean, you would be in profit. You'd be in profit. You'd be risking $9. You take 50%. You would hit that, right? You're 38.42. That's a good little trade there, right? It's not bad. It's not bad. And then if you hit both of these, boom, right? It's pretty good. So you could do 50-50. However aggressive you want to be, right? Right here on this trade, I want to do 13. That's what I want to do. I think it's a good trade. So at this central line, I'm looking for my take profit, my first take profit, and I'm going to take 13%. Someone might take 80, someone might take 50, but this is how you would trade it. So let me just read over my notes. Okay, so a good swing trade, chattel target. So long the bottom of the range, short the top of the range. So, and then this one says, all right, this is where I kind of, like I said, it's up to your trade, right? How much profit you want to be taking. Okay, so if at the so if at the middle line, take profit, you need the trade. You need to keep the trade open. It's suggested to aggressively have like a trailing stop loss, right? Look, I don't. To be honest, I don't trade that way. I don't trade that way. I don't like trailing stop losses. I mean, you can. It's a good way. I mean, and no one ever went broke taking profit. You know what I mean? So it's not a bad idea to have a trailing stop loss. But I like to keep my stop loss where it is. I'm happy to get my free trade, and if it's a free trade, great. But I definitely would like to keep it open, because the thing is, if I have a trailing stop loss, I mean, those can be pretty brutal. The market is so volatile; those can get triggered, and then you get knocked out of a really good trade. So anyway, just something to think about. I don't really like trailing stop losses. But all right, so here's our line, because at this point, what happens if we don't? Like, we come up, and the idea is, all right, you take profit and you come across, and then you get your little support, and then you keep moving. Fantastic, right? That's what we want to see. And then we're gonna move on towards our final take profit, right? But and honestly, depending, like at this range, I'm gonna be totally frank with you. Um, I might just undercut what I just said. Because of where we're at, because we're so low. I mean, like we got in at 2200, right? And the upward potential is really high. My take profit might not be 32.55. Like, I might not close that out. I might monitor it, right, and just see where it goes. All right, especially if I'm in a free trade. Like, why not, right? But typically, if this was just a normal range, you would want to like take profit. But because like the scenario, like we're just so low, if we are entering into a big pump, like if we're going to be moving on up out, and maybe challenge the all-time high, if that's going to happen, then yeah, I want to be holding this long. I don't want to close it out. Anyway, this is where you have to, really understand the environment where you're at and what you want to do. I'm really honestly, I probably will take profit at 22.55. That's my plan, so I want to stick to it. But I also want to see how aggressive we are, right? If we're moving up pretty aggressively, I might wait and see. Anyway, something to consider, right? You want to trade it. You don't want to micromanage your trades. This is where a lot of people make mistakes, right? But where we're so low and we're going to have a lot of room on this, potentially, it could be really good. But what if we don't get that scenario? What if the scenario is we come up and we get rejected, right? This is where we're going to be aggressive with our taking profit. Like, we want to have our take profit. We're going to have our free trade, and we're going to look. We're going to measure this off, okay? And we're going to look. Do we hit the 382 and then move on up? Fantastic, right? Do we come down and hit the golden channel, the golden pocket, right? And move up? Fantastic, right? If not, we are really gotta take a look and see, like, if we're moving down and we take this low again and we like break this channel, I'm probably gonna end my trade, right? Is there a real reason to keep this and let myself get stopped out at 1948? I mean, maybe, right? But I'm probably just gonna end my trade, right? It's a free trade. I'll secure a couple extra bucks, right? So why not just do that? So that might be a good plan, because it's a pretty big level to be rejected from, and we've been in a downtrend for like a month, right? We have to really start taking some highs, and that means like this, because this is the last significant high for a while. These aren't, I wouldn't, like, this is just such a drop. you know it's not really like it's not really like these are highs. I mean, they're like consolidation points almost, but we really have to get to here, like challenge almost 3,000 before we can really say like, oh yeah, we've got a solid change in market structure and all that. So anyways, with this particular trade, if we get rejected from the middle line, like 2782, 2800, and we start coming back down, it's still like that's pretty bearish still, right? If we come down, because now we would really want to look, are we taking that lower low? And if we take that lower low again, then almost certainly we're going to break 2000. Almost certainly we're going to be getting these entries filled, right? So I might just look for those entries. But typically when we're talking about swing trading, we're really focused on this channel. So it's different because we're talking about this particular scenario, but then also just like hypothetical swing trading. So just to reiterate myself one last time, and then we'll close this out. This is a take profit. It's a take profit. The middle of your channel is a take profit, right? You might ask, well, anyway, we're all good. I think I like my channel. It's just basically we're seeing this oscillating wave behind, through it. We got good touching right here where it was support, it was resistance, and we lost it. So anyway, it's real good. Take profit here, take profit here, right? Depending on your position, depending on how aggressive you are, you can wait. This is what you do. If you're in a long here, right? You can wait for this to break, get support, and move up. And yes, this would be the proper place for a trailing stop loss, right? Is you continue to have it go, right? You don't want to try and forecast the end necessarily of a bull run. If we are in a bull run, like, you just let it go. You let it go, and you can be very aggressive. In your profit taking. If you come up here, like, let's say we hit 4,200 and we come back down, we have some, like, a big retracement, and you see this, and then we start moving back up. Like, maybe that was a good point to compound your long that you're already in. So anyway, that's how you would trade this. You don't want to take a trade here. Here, I'm gonna highlight this in red. That's a terrible spot to take a trade. Well, not to take a trade, to take long, right? You don't take longs here. You look for validation. You look at for confirmation, right? But you don't long it there. A lot of people say that. Same with. So let me give you one kind of maybe, I don't know. Let me just draw this real quick. So let's say we were in some sort of a flag. This isn't working very good. Hold on. Let me get some more blank space. Whoa. And let's turn this off. So that type of trading only works in like this. This is the only scenario that I can really imagine this would be okay. Okay. Let's change this to white. Okay. So let's say that we move up and then we start doing this like bear flag type of thing, where it's a slow consolidation. Now, the way you trade this is you wait for it to break, you come back, you get your test of support, and then it moves up. This is where you take that trade. But you see, it's still a really good, it's still low. Like, so if this was a range, right, you're buying it low. Here, let me do something that's less severe. So like maybe, what the heck? All right. So maybe this was our flag, okay? And we come up, let's get this white. So we come up and then we start to flag a little bit. We get this wedge, right? It's often thought that you want to come up, wait for this, right? And then buy it on the confirmation. Possibly, right? If you're not already in a long, right? If you didn't get in earlier at a lower level, then this is a good place to buy, right? This is a good place to buy. Why is that? Because it's still relatively low, right? It's still relatively low, and this is a high risk play. This is high risk because you don't have any confirmation. You're gambling, right? You don't have any sort of confirmation. It very well could be the case that it comes down here and then just breaks down low, right? Sorry, I'll turn that white. And so if that's what happens, then you just get stopped out. At least here you're waiting for confirmation. But you see how this is very different. This is a very different scenario. Excuse me, got the hiccups. Than buying this, right? Because we're talking about. Let's find my little flag that I just drew. Where'd it go? Because you're not talking about. I mean, so relatively speaking, let's say that this is like 20% or something, right? I mean, you're talking about 2%, 3%. Higher of a price, but at least you have confirmation, right? This is significantly different, right? That's 50%. So these ranges are very, very different. You don't trade them the same. But yeah, this would be a great place to look for confirmation. If you got rejected like we did here, right, and we came back down, we didn't get confirmation, be like, all right, I'm taking profit. Cool. Maybe I'm entering into a short, like I'm going to switch. A lot of people have 2 accounts. So they'll take a short on this anyways if it's looking good, right? And then if the short doesn't work, if we get confirmation, you can close that out and continue on with your long. Or if your long isn't looking good, now you got a short, it's a good position, and you can trade your short all the way back down, right? And that's okay, right? Even if you were able to do that, right? I mean, and you were changing this. There's a lot of, what am I trying to say here? Like, again, think of this 3 out of 10 trades. That's all you need to win. 3 out of 10 trades to be profitable with our discipline. So anyway, that's all I have for now. Ranges are really, really cool. Take longs at the bottom, take shorts at the top, and take profit in the middle and on the other end of where you entered. That's the way to trade these. It brings great opportunity. And just keep in mind, if you were to trade this, let's say we were trading here, okay? It's a 40% trade, right? So 40%, you then take a short, right? Right here, 20%. We'll see how this plays out. That could be another 50%. It's a good range. It's a good trade. And if we break this level, we move below here. We've got lots of opportunity for, lots of opportunity between 2,000 and 1,700. So if we break this and we move down, right, this is our next level. This is our next level. Currently, that would be somewhere between a 15% drop to a 25% drop from where we're at right now. So it's not that far. It's fairly close. We just got to monitor and trade with proper risk management. So everyone, thanks very much for listening. Thank you for listening in. Appreciate that. I hope it was beneficial. When doesn't matter where you're taking your long or you're taking your short. Well, I mean, it matters, right? But I guess it doesn't matter if you're taking a long or taking a short. You take profit in the middle, right? And you want to be aggressive. You want to be aggressive on that, because if you move all the way up here, you take a short here, cool, take profit. Why? Because that may be where it gets its bounce. So trade safely, trade with the trend, and good luck, everybody. Have a great day. Talk to you later.